Mike Sullivan. I'm a former IRS agent and teaching instructor with the Internal Revenue Service. Welcome to my tube. So I was the IRS. You're actually getting information from a former IRS agent. I don't practice at this. I was the IRS. So I want to tell you about the offer and compromise. I worked at IRS 10 long years. I've been in private practice for 40 in tax defense. So I want to let you know a lot. By the way, I'm a national expert. I've been on the news many times. Check me out on my website. Let me tell you the things that you need to know about the offer. IRS is looking at just a couple things. What is the value of your assets? They're putting in your assets under a microscope and they're coming up with a value. What is that value? So that value goes here. The other thing they're looking for is your income. They want to know if you can pay any money because of your income and your expenses. Do you have any money left over? Those are the two things that they're drilling down on. So IRS has a value of your assets. So let's say that's $50,000. That's one value. Then they want to know, when they look at your income and your expenses, do you live within your means according to the IRS means, not according to your means? What do you mean by that? Very simple. IRS has a test that you kind of have to fit into. It's called the National Standard Test. What that is, the Department of Labor tells all government agencies what it costs to live in every county. So IRS takes away your values that you put for food and clothing, housing and utilities, car payments and car expenses, and they put in their values. You can look them up yourself. Look up IRS National Standards, and then you will find out what your values are depending on the county you live in, what your car payment, your food and clothing, car expenses. So whatever you put down, it don't make a difference because IRS is going to put their values in. So if you understand what those values are, the Department of Labor and IRS is going to put in, you're going to completely understand the offer. IRS is looking at the value of your assets and your income and your expenses. What do you have left over at the end of the month? IRS is going to take what do you have left over at the end of the month by the life of your statute. So if you got 5 years left on that, they're going to multiply that number by 60 and they add the two numbers together. That's it. That's the offer formula. That's all you have to know. But IRS is going to really drill down on your expenses because they want to have you have more money left over so your payment is higher. So you really have to understand this expense side. Very important that you do that. Make sure all your tax returns are filed. And if you're self-employed, you've got to make sure your estimate payments are up to date. So once again, make sure your tax returns are all filed. If you're self-employed, your estimate payments are up to date. Understand that IRS is going to look at your asset values that you're putting down for any assets, and IRS is going to look very closely at your income and what your expenses are, and they're going to substitute their expenses. If you understand that, you're going to be able to go ahead and navigate the offer and come out with success. Should you do this yourself? Two answers. If you're confident and you don't have a lot, do it yourself. If you owe a lot of money, you're crazy to submit your offer and compromise. The chances of you getting that offer through is like you winning the lottery. Yeah, some people win the lottery, but you're going to have a lot better chance with a tax professional. I know this back and forth. If you need me, call me. I answer my own phone. If not, give me a subscription if you would. I give you all the information you need. Feel free to email me or text me. Thank you.